Greetings children, welcome to my channel Inside Accountancy by Shakun, Accounting Made Easy. Today we'll be talking about other books, that is the Special Purpose Books 2, chapter number 11 of your book T.S. Garewal. In this video we'll be talking about the subsidiary books, especially the purchase return book and sales return book, and we'll understand their preparation with the help of an example. So, as you all know that subsidiary books are prepared because the transactions in a business firm may be numerous, and in order to conveniently record those transactions, we classify them and record them into separate books such as the cash book or the purchase book or the sales book. We can also prepare the return books, that is the purchase return as well as sales return, and respectively the transaction which does not find a place anywhere is recorded in the journal proper. So all cash transactions in cash book, credit purchases in purchase book, credit sales in sales book, returns in returns book, and the journal in the journal we record the other transactions. We have already talked about the preparation of cash book, purchase book and sales book. For more details, you can click on the I button. Today in this video, we'll be talking about the preparation of returns book, that is the purchase return book as well as sales return. So moving on, let's first understand what purchase return book and sales return book mean and which transactions are recorded in them. Now, purchase return book is also called as return outwards book, as purchase return is also known as return outwards. So, we also call it return outwards book. And this is a subsidiary book maintained to record the goods or materials which are returned to the seller of the goods that may have been purchased on credit. So, this return outward books is prepared whenever we want to return the goods that have been earlier purchased on credit. So the goods which were earlier purchased on credit are now returned back to the seller. Now in these purchase return book, whenever a transaction is recorded, whenever there is a return, there is always a debit note. That is, whenever, when is a particular good returned. Now this book is maintained whenever the goods are returned, and goods may be returned because of many reasons. They may not be according to the sample, they may not be as per the order that we placed, they may be defective, they may be delivered late, or maybe the customer refused to accept them. So there might be various reasons why a particular good may be defective. Now in all the cases, what happens is the purchaser, he prepares a debit note and he sends it to the supplier. The purchaser prepares a debit note and he sends it to the supplier. Now this debit note basically is a document which notifies the person that a debit has been made to his account. And the reason for this debit would be stated in the debit note. Now why this debit would be made? Because of the reason that the goods may be defective or other reasons and the goods have been returned. Now this purchase return book, in this purchase return book, the cash transactions, the goods that were purchased on cash, when they are returned, that is not recorded. Only the goods that have been purchased on credit earlier, means those goods that have been recorded in the purchase book, if they are returned, they will be recorded in the purchase return book. So if the goods are purchased on cash and then they are returned, they will not be recorded in the purchase return book. Now, the return of assets which are purchased is also not recorded. So, the goods purchased on cash earlier, if returned, will not be recorded, and the return of assets is also not recorded. Similarly, in case of sales return book, it is known as return inwards book also, and it records the return of those goods that we are making, the customer is making to us, to record the goods or materials which are returned by the customer of the goods sold on credit. Again, you have to note that in case of sales return book, only those returns are recorded for the goods that have been sold on credit. If the goods were sold on cash, their returns will not be recorded in the sales return book. Also, like in case of purchase return book, a debit note was issued. In case of sales return book, a credit note is issued. Now, this credit note is prepared when the goods are returned by the purchaser on and on its basis the entry is recorded in the sales return book. This is basically a document which is evidencing that a credit entry has been made it to record to the account of the debtor. In case of sales book also, or return out inwards book also, the return of goods that are sold on cash is not recorded, and the return of assets sold is also not recorded. So that is on the same logic as we were preparing the purchase book and the sales book. Moving on, this is the format of your purchase return book. These are the columns: date, particulars, debit note number, ledger folio, details and amount. Under date, we write the date of the transaction. Under particulars, we will write all the details in terms of the name of the seller, the price and the quantity of goods that have been returned. Under debit note number, we write the number which is mentioned on the debit note. Ledger folio is basically the page number of ledger book. Under details column, we mention, like we used to mention in case of purchase book and sales book, we mention the list price, that is the quantity into price. From the list price, we subtract the trade discount, and then we add the expenses and we get the total amount payable. All that is mentioned under the details column, and the total amount is then shown in the amount column. So I have taken an imaginary transaction here. So we have the name of the seller given, Messrs. Gupta and Verma. The details are mentioned. We multiply the quantity with the price and we get this amount here. From that we subtract the trade discount and we get so this 24,000 is a list price on which 10% is calculated, which is the trade discount. After subtracting, we get 21,600, which is shown in the amount column. Now, after mentioning all the transactions in the purchase return book, and then we find out the total of the amount column. In this case, I've taken just one transaction, so my total would also be 21,600. And here, if you notice, I have written purchase return account CR. Why CR? Because purchase return always has a credit balance. So purchase return has a credit balance of 21,600 as per purchase return book. Now let's have a look at the format of sales return book. Again, in the sales return book, the format is same, absolutely same, only difference being that in case of debit note number, here we have mentioned the credit note number. Okay, that is the only difference between the format of a purchase return book and a sales return book. Instead, in purchase return, we have debit note number, here we have credit note number. Date mentions the date, particulars mention all the details such as the quantity, price, name of the purchaser, etc. Credit note number, the number on the credit note. Ledger folio is the page number. Under details, again, we mention the same things: list price, less trade discount, add expenses, and then we get the invoice price, which is mentioned in the amount column. I've taken an imaginary transaction again where I have written the name of the purchaser here, ABC and Company, then the details. Then from this, I am subtracting the trade discount, which is calculated on the list price. Then the amount which I get in the end is written in the amount column. And then we find out the total of the sales return book. And that is 18,900 since I have taken just one transaction here. If you notice, I have written sales return account DR. Why DR? Because sales return always has a debit balance. Moving on. Let's take a question and try to understand the preparation of purchase return book and sales return book. As I did earlier, I'm going to read the question and I'm going to identify that which entry will be shown in purchase return book and which entry will be shown in sales return book. So the first transaction is Mathur Brothers, New Delhi, returned 5 pairs of shoes for being defective at 2,000 per pair, less trade discount. So Mathur Brothers, New Delhi, returned. They returned to us because they have returned. That means they are returning to us. The goods are coming in. These are sales return. We would have made the sales to Mathur Brothers. Now the goods are being returned to us. So this entry will be recorded in the sales return book. Okay. Next is returned to. Returned 2. Now we are returning the goods to Kanpur Leather Private Limited. So again, the description of the goods that are returned is given. 100 pairs of chappals being not up to the approved sample. They are purchased at 300 per pair and trade discount is also given. Now we are returning. That means we must have purchased from Kanpur Leather Private Limited and now we find the goods defective. So therefore we are returning. So purchase return book. Next is Baluja Shoes Company Limited returned 12 pairs of ladies' chappals sold to them at 4,000 per pair. Again, now they are returning. So this will be recorded in the sales return book. Because they are returning, that means we would have made sales to them which they found defective and now they are going to return the goods to us. March 20 returned 2. Returned 2 means that we are returning. We would have purchased and now we are returning goods to Bata Shoes Private Limited. So this entry will be recorded in the purchase return book. Okay. So we have 2 entries in the purchase return book and 2 entries in the sales return book. Now I am going to go to the question and let's see how these transactions are shown. So this is the purchase return book. I'm going to write the first purchase return which I made from Kanpur Leathers Private Limited, which I just identified from the question. Then followed by the details in terms of quantity and price. After multiplying the quantity with the price, I get 30,000. This is my list price. From the list price, I calculate the trade discount at the rate of 15%. Then I subtract from it and then we get the value, that is 25,500, which is transferred to the total column. The second purchase return transaction was on March 20, Bata Shoes Private Limited. Again, I mention all the details here. 100 pairs of canvas shoes, rupees 500 per pair. So after multiplying, I get the list price. So this 50,000 basically is the list price on which the trade discount at the rate of 15% will be calculated. So after calculating and after subtracting, we get the value, that is 42,500, which is mentioned in the total column. After we put all the transactions in the purchase return book, there were only 2 and we've put both. After that, we find out the total of the total column. We find out the total of this column and which amounts to how much? Which amounts to 68,000. Okay, so this 68,000 is the total of purchase return book. So therefore, I've written purchase return account CR. In case you forget whether purchase return has a CR balance or a DR balance, you should always remember. I'm just writing it on the top somewhere. You should always remember that purchase always has a DR balance. So purchase return would always have the opposite balance only, na? Obviously. So if purchase has a DR balance, purchase return will have a CR balance. Similarly, sales has a CR balance. So sales return will have a DR balance. This way, I think you will remember. So moving to the sales return book, again, we had identified 2 transactions. We are going to record it. First the name, then the details, which gives us the list price. From the list price, we calculate the trade discount, which is calculated on the list price. We subtract it, we get 9,000, which is transferred to the amount column. Then the second transaction, again, we write the name of the person, the company, then the details, which gives us the list price 48,000. Then the trade discount is calculated on 48,000 and subtracted from it, which gives us 43,200, which is transferred to the amount column. Again, we have mentioned both the transaction. Now we are going to find out the total of the amount column and which gives us the total of the sales return book. Sales return, as I told you, has a DR balance and the total would be 52,200. Okay, so if in the same question we were asked to do ledger posting from the purchase return book and the sales return book, then how can we do that? So let's go back to the purchase return book. So this was the solution which we had just found out, and this is how your purchase return book looks. Now, in this book, first of all, you should understand that what is the balance of the book that you are making. Purchase has a DR balance, so therefore purchase return would have a CR balance. Okay, so purchase return has a CR balance. So the total of the purchase return book, that is 68,000, will be transferred on the credit side of purchase return book. That's one. Then as many accounts will be made in ledger as many names are appearing in the particulars column. So if you look in the particulars column, there are only two transactions. First is Kanpur Leather Private Limited and the other one is Bata Shoes Private Limited. So there are two accounts which have to be made from in which ledger posting is to be made from the purchase return book. So basically when we talk about the ledger, three accounts will be made. Purchase return account, on which we will mention on the credit side, and the respective person's account, that is Kanpur Leather account and Bata Shoes account. Now, since purchase return has a CR balance, that means any name that appears in the particulars column will have a DR balance. So, Kanpur Leather Private Limited and Bata Shoes Private Limited both have a DR balance, and ledger posting in these accounts will be made on the debit side in the name of purchase return book. Now let's go to our ledger accounts. So these are the three ledger accounts that we are required to make: Kanpur Leather Limited, Bata Shoes Limited and purchase return. Now purchase return has a credit balance, so we are going to record on the CR side, and in the names that are mentioned in the purchase return book we are going to record on the debit side. So this is how your transactions will appear. In Kanpur Leather Private Limited, on the debit side by purchase return the amount, and in Bata Shoes Limited on the debit side by purchase return the amount. So simple logic that if purchase return has a CR balance, the posting in the respective accounts that are mentioned there will be made on the debit side. Now purchase return has a CR balance, so on the credit side we write by sundries. Sorry, there's a error here, so it's not to, it's by. So by sundries as per purchase return book, that is 68,000. So this is how we make the ledger account. Now let's have a look at the sales return book. Again, this is your sales return book, how we made in the question that was that we were talking about. So in this book again there are two names that are mentioned here: Mathur Brothers and Baluja Shoes. Now you know that sales return has a which balance? Sales return always has a DR balance. Okay, so this total amount 52,200 will be mentioned on the debit side in sales return account. So that's first account that is to be made. Then we will make as many accounts as the names are mentioned in the sales return book. So if the sales return has a DR balance, that means these accounts will have a CR balance. So therefore posting would be made on the credit side. So let's have a look at the ledger accounts here. So Mathur Brothers account, Baluja and Shoes account and sales return. As I just told you that sales return has a debit balance. So entry would be made on the debit side, and in the respective other ledger accounts the entry will be made on the credit side. Just have a look to sale. Sorry, I have again made an error here. So in the respective ledger accounts we will write by sales return in Baluja Shoes and in Mathur Brothers, and in sales return account on the debit side we write two sundries as per sales return book and the total amount is mentioned. Okay, so this is how we do ledger posting from the purchase return or sales return book. So on the basis of the concepts that I've taught, you have to attempt question number 9 to 13 from your book T.S. Grewal, and I shall look into the doubts. In this video, we have talked about the subsidiary books, the purchase return and the sales return book along with the help of an example, and we also learned how to do ledger posting from these books. I hope the concepts are clear to you. In case you have any doubts, you can contact me on my email ID, or you can also put some comments in the comment section below. Like, share and subscribe to my video. Pass it on to as many as possible. So this is Inside Accountancy by Shakun signing off. Thank you so much.